Alrighty, traders, this is Blake Morrow. You are listening to the Daily Roundup webinar. I hope everybody's having a great trading session ahead of the FOMC, which is coming up in about an hour and a half or so. I want to talk about a few things. Actually, the last chart I was looking at here is just the Dow. The Dow is holding up very well, holding on to its gains, and but I was just noticing that as the NASDAQ continues to be very weak here. Let's pull up the NASDAQ really quick. Here's the NASDAQ 100. You know, because I was like, oh, the NASDAQ is not at highs, but you know the Dow is. So we continue to see that that big divergence as between the Dow and the NASDAQ as yields move higher. So let's take a look at yields and let's just kind of see what we've got. And you know, we continue to hit new highs in the 10-year. Now, I was talking with a couple of guys that I used to trade with regarding the bond market, and you know, they were looking at possible reversals here. I think it's too early to tell. However, a couple things I want to talk about this move in the bond market. It's like, can you get long the bond market or get short yields? It's possible, but you know, we got to see why the market's moving that particular direction. Okay, so obviously it's going to matter what the Fed says. Question is, what are you going to trade? And one of the things that you can think about is trading the dollar yen, and maybe trading it on the short side. If you trade FX, you might think dollar yen. The one thing that I want to bring up for you regarding the dollar yen is the fiscal year end in Japan, which, you know, that's like, it's usually yen negative, right? So, you know, let's see, hold on really quick. Let me make sure I got the date, because I think it's the end of this quarter. I'm 90% sure. The end of March. So, you know, for right now, the yen could continue to stay weak or weakish. So let me rephrase this. Let's say yields pull back. We might see the dollar yen reverse off of these levels. Remember, this is like a really, really key weekly resistance for the dollar yen, you know. But we may not get, even if stocks fall and yields come down, we might not get a substantial move lower in the dollar yen or other yen pairs until the beginning of March, or beginning of April, excuse me. So that's something just to kind of think about. Something, and it wasn't something I was really even thinking of until my one of the guys that I used to trade with, he's like, yeah, we got to watch the year end. And I'm like, oh crap. It's, you know, it throws me off every year, it seems like, because I'm constantly looking for, you know, something to do here in the yen right around this time, and then you have to take that into account. Now, nothing's changed between you know, earlier this morning on the Face webinar than today, than just now, or than now, other than, you know, equity markets like the S&P and the NASDAQ are trading a little heavier. You know, we have to be careful. We have to be careful of the Fed governor sounding, you know, any type of hawkish comments is going to send the stock market lower, and it's going to send bonds lower, yields higher. And if yields go higher, the one other question I'm going to be asking regarding like the yen pairs is, what do you do with them? Because if, let's say, stocks are moving lower but yields are going higher, the dollar yen should be torn, you know, kind of pulled in both directions. And therefore, the trade might not be, and I'm short some euro yen, so that this is why it is, I'm thinking about this. The trade might not be in the yen pairs. The trade might be in, the commodity currencies like the Aussie. By the way, the Aussie is probing, this key 77-cent level support. I mean, this is probably where the trade's at if stocks go down. Short Aussies, short Kiwi, right? And I mean, long. My favorite trade is long U.S. dollar, U.S. dollar, Norwegian krona, and I can't put the pips in yet. I want to put in a bear flag pattern in play for the Kiwi. I just can't yet. Not ahead of the FOMC. Following the FOMC, we're probably gonna, if stocks come down, and the Kiwi looks like it's moving lower, we're gonna have to do a pattern in play, for the Kiwi. Aussie, you could do the same thing. Emerging market currencies, dollar, Mexican peso, Salma, we like to call her in the chat room. That might be a long trade, a good long trade. But those are the things that I think are going to be better trades than shorting yen pairs if stocks come down. Now, let's talk about if stocks go up. If stocks go up, what do you do here? Well, in my opinion, you go along these commodity currencies because the Aussie's kind of underperformed. So if, let's just say we get status quo, and for some reason the stock market just likes it like it always does, then, you got to play the Aussie dollar back above 78 cents because I think a lot of people have been trying to short it up here, myself included, even though I didn't get short any Aussie the last couple of days, even though I've had some orders out there. I mean, how many people are leaning on the Aussie as it rolls over and it's just, diverging away from the equity markets? That means it could play some catch up. We could theoretically, make a move back for 79 cents, maybe 80 cents, right? Another trade that you could be thinking, if stocks like what they see today, the dollar Canadian's been trading super heavy. Why can't we make a move for 124, maybe even 123? Andre had jumped in the chat room yesterday and he looked for the Aussie or the US dollar Canadian to go to 120. That becomes all very possible if the stock market really likes what, the FOMC decision brings us today, right? So anyway, just some food for thought on as we go into today. I want to leave you with this though. If you guys think that there's going to be some risk aversion, again, my eyes on Bitcoin here. I don't need it to break lower for me to be like, okay, we're going to get some risk off, but it sure would be nice to complement risk off, right? Meaning that if stocks, start to come down because, the Fed chairman was too hawkish, or, maybe just doesn't care about yields rallying and suggests that he doesn't, then, if Bitcoin really, gets slammed down through 5250, I will feel a lot better about being short risk. I don't need it to follow, but it would be nice. Okay. And then also let's keep an eye on yields. If yields continue to scream higher, that's should be a problem for stocks. Daily sentiment index for both the 10-year and the 30-year are at 15 and 16. Okay. 15 for the 10-year, 16 for the 30-year. That means they are not super extreme yet. We could go lower. And by the way, I was looking at the 30-year bond, just looking at this chart. earlier, we're below the 618 and we're actually attacking some pretty key support here. So I wouldn't be surprised if yields started screaming higher. This is all divergent. This is the 30-year, guys, by the way. That, you know, bonds continue lower. You know, relative strength stays oversold, maybe hits a very, very brief low and then reverses. All right. I think that's possible. So, all right, guys, it's going to be hopefully pretty exciting in the next couple hours. So you guys just try not to get in any trouble. Tread softly and lightly in this environment, and please be safe out there. And if you're in the chat rooms, I'll see you there. And if you're not in the chat rooms, just keep an eye on, you know, the updates. I'll be sending updated charts, you know, post FOMC. So just be on the lookout here in your live stream for updates on basic technical analysis. You'll see some of mine. And thanks, Lorraine. Thanks, Brock. And thanks, everybody, for listening in. I'll catch you a little bit later. And good luck. Good luck. And thank you all for your support.